everybody. Thank you for joining us. Welcome to our regular Thursday investment webinar brought to you by Real Estate Investor. And today's investment webinar is hosted in conjunction with the Sovereign Group, who are one of the largest independent corporate and trust service providers in the world. And today we have our Sovereign guest specialists, Ralph Wichman and Renee Silk, who I'll introduce to you very shortly. For those of you who don't know me, my name is Neil Peterson. I'm the founder and content chief of Real Estate Investor, South Africa's leading independent digital real estate content and education platform. It's already for over 16 years, and we're really passionate about serving the South African real estate business community through our digital content platform, REI.co.za, our monthly digital magazine, Real Estate Investor, and our webinars and live events. So I'm really delighted to be your host and moderator for today's investment webinar. And today's topic is all about globalizing, diversifying, and how to structure your business and property investments for international success. So Sovereign, our offshore experts today, will shine a spotlight on the reasons, the advantages, the pitfalls, and the compliance that is required in popular jurisdictions that are in demand for South African investors and also business owners. So without further ado, I'd like to welcome our guest panelists today, Renee Silk and Ralph Wichman. I call them R and R. And as you know, this Sunday is Mother's Day. And Renee, as I know you are a mother too, would you
Yes, I am.
Would you please introduce yourself to the audience first?
Thank you, Neil, for the introduction. Good afternoon, everybody from a rainy Cape Town. My name is Renee Silk. I'm a senior consultant for Sovereign Trust South Africa, qualified lawyer, practiced law for 8 years, specializing in property law and commercial law. I've been in the offshore industry now for 14 years, of which I've spent 8 years with Sovereign Trust. And our goal and motivation is to provide bespoke solutions for clients wishing to diversify their assets offshore.
Wonderful. And great having you on today's webinar. And last but not least, we've got Ralph. Ralph, if you could introduce yourself and maybe also give us an introduction on Sovereign as well.
Good afternoon, everyone, and thank you again, Neil, for hosting us on this webinar. My name is Ralph Wichman. I'm the Managing Director of Sovereign Trust SA. My background is also in the legal sphere and in consulting and advising clients from a corporate and commercial perspective, and obviously the past few years quite a bit in the offshore space, which is quite an exciting one, by the way. And we've seen quite a lot of interest from South African clients looking at offshoring their business. So just quickly, who is Sovereign Group and what exactly do we do? We are one of the largest independent corporate and trust service providers in the world. And that just really speaks to us being positioned to quickly adapt to the market and position ourselves in markets where we see our clients actually that have a need to expand in a particular market. And we've actually recently engaged in and acquired a local company in the Gulf region, which is a massively expanding area to be able to service clients within the Saudi, the Qatar, Oman, and in Bahrain, the whole Gulf region of countries that clients wish to position themselves in. Our first office was established in Gibraltar in 1987. So we aren't a new company, we're an old company. We, in excess of 36 years, we've been around, really organically grown since then as our clients' needs have expanded. And we have about 20 offices split, or in excess of 20 offices split across the globe, to really assist clients in those regions on the ground with staff, with necessary expertise to be able to successfully onboard them in those particular jurisdictions. Currently, Sovereign services about 20,000 clients across the group, and we have assets under administration in excess of £20 billion. Our key service offering really is in 4 main categories. The corporate services and private client services is our main focus, and that's probably where the bulk of our business is done. That links up quite nicely to the retirement and pensions planning services, and that we've seen quite a lot of growth in that, where clients actually look at expanding or linking their sort of wealth generating activity with their retirement planning. And that really takes a bit of a holistic approach to the whole structuring process. Lastly, there's also the insurance services component, and that's sort of a branch or a natural organic growth from the service offering that we do provide clients, as we've seen clients looking and requiring insurance services for their particular business. And that's quite a decent portion of business, from company insurance, but also all the specifics. And that's actually a topic on its own for another day. Just quickly, a diagram to explain who Sovereign is. You'll notice there just the red dots on the global sort of picture there that really focuses on the regions where we provide clients services. You'll notice it's across the globe, and we really pride ourselves in that we are able to link up with clients to assist them as fast as possible to expand their business from a global perspective. I'm also very proud to say that our South African office, our Cape Town office, was established in 1994, one of the sort of earlier offices of the Sovereign Group, and 1994 being obviously a very important time period for South Africa. And since then, obviously, the group has expanded significantly. On the more of a softer side of Sovereign, the Sovereign Art Foundation is our sort of pride and joy, and that really speaks to our initiative from a philanthropic point of view to assist sort of the needs of the communities where we have offices. The Sovereign Art Foundation has raised in excess of $10 million over its years of establishment, and it helps and applies those funds really to assist children and their families who have special needs in the countries where we operate in. And it's really growing quite nicely now. We're seeing a significant need and interest from the business community, business communities where we are based. So I think, Neil, I'm going to hand over to you again, and then we'll take it from there.
Yeah, no, great. Okay, so let's get into the whole guts of the presentation. And Renee, I'm going to ask you, in your experience, and particularly with Sovereign, as a management company that has been providing fiduciary services for over 35 years, I mean, what are the typical reasons why clients globalize their wealth? Because, I mean, as South Africans, we got a lot, but I'd really like to see.
Thank you, Neil. So one of the first questions we usually ask client is, why would you like to diversify? What would you like to achieve? And the answers we get from clients usually are more or less the same. And I listed a couple of them here. Political stability. So investing in a political stable environment attracts more foreign investments. I've had 2 clients in the past month setting up offshore structures due to foreign investors that does not want to invest directly into South Africa. Another one is to hedge against currency depreciation. Gaining offshore exposure is a good way to mitigate risk that the weak rand presents. A big frustration when it comes to business is exchange control. As you all know, any money that flows in South Africa or leaves South Africa, you need to get permission for that. Another big reason that comes up is wealth protection. So the assets we've acquired or created are critical to enable us to lead the lifestyle that we want. It's natural for us that we want to preserve this wealth and that we want to cater for our loved ones and leave a legacy for them. It's also a good way to protect your assets from creditors. There are options where you can actually get residency offshore. And then last but not least, if you do this and you do it right, you can get access to a whole range of tax benefits. I'll get to that in a bit more detail later, but that being said, no structure should be solely tax driven. So that's typically the reasons we get from clients why they want to diversify their assets. And I think there's a lot of merit to it. And in our industry, we always have a saying that we want to live in the sun, but we don't want to bank in the shade. So that's typically why people are looking at these offshore structures. So now that we know the reasons, I think a very good question is, how do you go about in setting up a compliant and a tax efficient structure? We are all well, most of us, I presume, are tax resident in South Africa. So we need to ensure that we comply with the legislation and the regulation from a South African perspective as well, to ensure that when we do this, we do structure the setup that it is a success. So one of the first reasons one need to consider is, for you to do this, you need to have a sound commercial reason for the business. For example, an international base provides a better entry point for foreign investors, because it's more attractive for foreign investors to invest in a political and economic stable environment. Another good commercial reason for setting up your business offshore is the ease of operations in international jurisdictions. Because if you set it up offshore, you're not restricted by exchange control. You're not prohibited with doing business and having to comply with BEE requirements and things like that. And by setting up the structure correctly, you create new possibilities to retain your profits offshore, to build an offshore estate, and to get access to a whole range of residency options. The second thing one needs to consider is, when you do set up a trust or a company or both offshore, where are your place of effective management and control? And this is a big one, because the fact that a company has been incorporated offshore doesn't mean it will not be subject to tax in South Africa. And it comes down to your place of effective management and control. This is a very big topic in our industry. It's ongoing, but it comes down to this. Place of effective management and control is where you make your key management and commercial decisions for the business as a whole with substance. For example, if the directors of the business, you set up your offshore company, but the directors and the decision-making is in South Africa, it will be a South African company for all intents and purposes. It will be subject to corporations tax of 28% and withholding tax of 20%. So here one needs to look at ongoing practical considerations to ensure that your place of effective management and control is not in South Africa. For example, at least one person of senior management needs to be outside of South Africa. Usually the corporate trustee provided by Sovereign will suffice, or the corporate director, and sometimes you need an individual director. We can assist with that as well. When it comes to board meetings, you should not initiate the board meetings from South Africa. The board meetings should take place offshore, but it should not merely be a rubber stamp for decisions that you actually took while you were in South Africa. And that brings us to your record keeping. It's important to have proper board resolutions, proper minutes of meetings to ensure that you've got the necessary proof in place that all the big strategic and management decisions was taken offshore and not in South Africa. The third thing you need to consider is controlled foreign company legislation in South Africa. It's also referred to as a CFC. So what that means is, if a South African tax resident sets up a company overseas and 50% shares of that company or more are held by a South African tax resident, that company will be deemed to be a controlled foreign company. The effect of that is that the net income will be included in the resident's income, taxed at his or her marginal rate, which is usually up to 45%. There are exceptions to this, but I'm not going to go into too much detail today. The solution, and this is typically what clients do based on advice from tax advisors, is to interpose an offshore discretionary trust between the South African tax resident and the offshore company. The fourth consideration is, now that you have your trust overseas holding shares in your underlying company, or even if you only have a trust overseas, is how do you go about to fund the structure? If you get your clearances in South Africa and you take your foreign investment allowance out and you transfer it to this trust or company, that will be a deemed donation in South Africa, which means they're going to tax that at 20%. So if you transfer 100, 20% of that will go towards donations tax. So typically what clients do is, the South African tax resident will make a loan to the offshore trust or company. It's very important that you need to charge interest on that loan at a commercial rate, which I think is currently about 7.5%. That loan still forms part of your estate in South Africa. But the idea is that that loan needs to be repaid as soon as possible. Then the last consideration, which is vital when you want to ensure that you do set up the structure successfully, is you need to be underpinned by the right team. It's easy to set up an offshore structure, but because we are South African tax residents, it can get complicated and it can get costly. So we are not tax advisors. We've got a very good understanding of how the local legislation works, but we do encourage our clients to obtain professional tax advice from an independent tax advisor. The tax advice can also protect you against penalties from SARS. Part of your team, in addition to the tax advisor, is your management company. Do your homework. I can safely say Sovereign does have a long-standing track record. We're on the ground and we understand the local and the offshore regulation and legislation. And I think the last person, which is vital to ensure that you do have a successful structure, is you as the client. Often I meet with a client and then they already have a structure offshore, which they don't understand, and the costs are so increased every year and it's high and it just doesn't make sense. You need to understand your structure and you need to put together the right team to ensure that it's managed properly and correctly and that you comply with the local and the offshore legislation and regulations. That's it in a nutshell. I just want to go over to my next slide. Thank you, Ralph, which is a diagram of typically what the structure for South African tax residents would look like. As I've explained, you would establish an offshore trust. The trust will hold the shares in your underlying company for the reasons I've explained above. On trust level, you as the client will be the settler of that trust. You will hand an asset over to the trustee to administer to the benefit of the beneficiaries. A party to an offshore trust, which we don't have in South Africa, is a protector. And a protector has the right to veto any decisions made by a trustee. Then you and your family can be the beneficiaries of that trust. The trustee of that trust will typically be a corporate trustee like a sovereign trust, providing the fiduciary services to ensure that your place of effective management and control are not brought back to South Africa. The trust will hold the shares in the underlying company, where sovereign can act as a director, and that will also be a corporate director. And the client usually will be appointed as a consultant to give guidance on what should happen in that company. But that's a summary of what a structure would look like in a nutshell. And if you do it right, if you comply with the legislation, if you have a good commercial reason for doing it, you will end up with a structure whereby there's a lot of tax that you can potentially save. If your company declares a dividend up to the trust, your withholding tax on dividend, royalty, and interest can be reduced to either very low withholding tax or 0%. There's no capital gains tax in most of these offshore jurisdictions. There's no stamp duty, registration duty, or inheritance tax, like, for example, in the UK. The assets that you accumulate in the structure will not form part of your estate in South Africa. The trust will typically be taxed at 0%, and the corporate tax rate for the companies, depending on which jurisdiction you structure in, usually ranges between 0% and 15%. I'm not going to go into much detail on the jurisdictions, as my colleague Ralph will cover that. And that really is what I'm bringing to the party today on when you do your structures internationally. Make sure you do a compliance structure and put the right team together. Thank you, Neil. That's it from me.
Great stuff, Renee. I think there's quite a lot there. And just on your last slide over here, on the structure, because not every jurisdiction, I would assume, and I know it's also going to be part of Ralph's presentation, so I don't want to steal his thunder, but maybe just your example that you've used here, is this particular pertaining to a particular jurisdiction or country, or is this the standard for everybody?
So there's no standard for everybody. It really depends. We analyze it from a client to client, but this is typically what the structure you will end up with.
Okay, great.
I mean, I can safely say 95% of my structures, you have your offshore trust holding shares in the underlying company. And maybe just to add to that, even if you're happy just to have your company overseas, even if it is a controlled foreign company in South Africa, when that company makes a profit and it declares a dividend, it's going to come back to you in South Africa and it's going to form part of your estate. So 99% of the cases, that is typically what your structure would look like across the board. Right.
Excellent. No, great. Thanks very much for that, Renee. Rolf, we're going to hand over to you in terms of the jurisdictions and the regions that you actually cover for expanding your business. So I'm going to hand over to you, and you can take it from here.
Thank you, Neil. So I think a very important consideration, as Renee also alluded to, it's quite important when you are looking at expanding your company or embarking on the journey to incorporate a company in a specific jurisdiction. What is the key component, the key question you need to ask yourself? It needs to be guided very firmly by the business rationale. It can't just be, I like that particular country, it just looks nice. It has to have a very clear business rationale in terms of why you are embarking on expanding your company into that particular jurisdiction. It sort of undergirds the substantiating factor for actually justifying the actual expansion strategy. Now, there are various categories or factors that one actually needs to take into account in determining which jurisdiction is most suitable for a particular client. I'm going to go through them in a second, but it's really, if I can maybe suggest to clients, really to sit down and say, listen, what is your strategy? Where is your end client going to be based, or end clients going to be based? And also, where are your service providers, those external service providers based, which are going to directly or indirectly service your company or service your clients? So the jurisdiction of both the clients as well as the service providers play a key role in terms of deciding which jurisdiction to base your company in. First up there is intellectual property considerations. Now, in South Africa, we've come across quite a lot of clients operating in the sort of IP space. They're software developers, or they develop some sort of product or that actually has an IP component to it. And IP is quite a sticky asset. So typically where you thought about it, that's typically the country where it vests in. It's a very specialist field, and we typically surround ourselves, as Renee mentioned, with specialists and IP lawyers that specialize in IP. We really work as a team to be able to assist the client as best we can. So a lot of clients actually service companies from South Africa that where the clients are based outside South Africa, and they have investors that want to invest into their company, they want to create new IP. Then typically we ask the question, all right, what is the jurisdiction that is suitable for the investors? Where are the end clients going to be based? Because you typically want to position yourself, and that sort of ties in with the following point, really, where your end user clients are actually going to be based. If you want to enter a particular market or region to service clients there, most notably the EU or the US, you typically want to ensure that you base yourself within that region, in a country within that region. There are various reasons for that. There might be free trade agreements, tax treaties that play into your decision-making, and that really supports the company to ensure that it stays competitive within that specific servicing sector. We have a globalized world where there's all sorts of countries globally that maybe operate in the same service sector. Some countries have reduced labor costs or reduced costs in certain aspects that make them more competitive than other countries. So it's really a holistic approach that one needs to take to ensure that if you base yourself in a particular region, or sorry, a country, that it has quite a lot of different benefits for your company, especially going forward for the next 5 or 10 years, to ensure that you have a sustainable company that actually remains competitive. And a lot of maybe just to add on to that, a lot of times, if you are going to service a particular region, such as the EU, which is very highly regularized, it actually requires you a lot of times to actually be based in that region, or based in a country within that region, to be able to service those countries and access those free trade agreements, especially clients in the import and export sector, to remove or reduce the import duty. The free trade agreements really go a long way to assist clients to successfully expand into a particular region. Logistics hub, quite important. Singapore is an excellent jurisdiction from a company structuring perspective. It's a very well-regulated, quite advanced banking sector, financial sector, legal sector. It's very fintech focused, and really it's quite a good jurisdiction to base yourself in if you are going to enter or service the Southeast Asian markets, but not purely that region, also on a global perspective. We do see clients that look at Singapore because of it's also a good region to hold IP. If your company has a lot of heavy on IP, Singapore has quite a lot of treaties, and it's quite well positioned to protect IP first and foremost. It's got a very advanced legal system, but also it's very beneficial, and the banks also understand sort of offshore companies quite well, and that's quite a key consideration. Key servicing market, UAE and Gulf region. I mentioned earlier that Sovereign has also taken the position to expand in that region, position ourselves in that region to service our clients. It's growing at a massive rate, especially Saudi Arabia. We've been in the UAE, in specifically Dubai and Abu Dhabi for many years now, successfully servicing clients there. We do see clients wanting to enter that market. It's a very wealthy region, especially for products or services. It's a very attractive region for clients to base themselves in. There are very specific requirements to be met in order to be able to service the local market, and Sovereign on the ground there is really able to advise clients with that. That ties in nicely with the relocating or appointing local staff or staff retention. A lot of clients are expanding in a specific jurisdiction. That jurisdiction might require that you actually base staff there or appoint local staff there. Especially in UAE, for example, you actually have visas issued with your company license. And the amount of visas issued relates to your service sector or how big your company is or how much office space you need. And Sovereign really assists with the visa applications, the HR around that. And that really helps clients to be able to onboard the whole position of actually relocating staff to that particular region, which could be quite a daunting task. Some companies, of course, they don't have to have staff on the ground. The staff can work remotely. That is sort of a tendency, especially post-COVID. It really is a case-by-case basis that we look at that. We also see in South Africa, I think it's quite important, residency and citizenship programs are quite popular. A lot of those programs actually entail that you register a company in a jurisdiction where you want to obtain your residency. And that's certain minimum criteria that you either need to appoint staff, you need to invest a certain amount in that country or the company to be able to qualify for that particular residency program. Portugal being a firm favorite, of course, but also Mauritius, quite a firm favorite. It's quite close to South Africa, and it certainly has quite a few options for clients looking at establishing a company there, investing into it, and obtaining residency. Lastly, there on the spot, we have crypto-friendly legislation regulations. It's still a very sort of a frowned upon industry, unfortunately. A lot of countries have a very reserved approach to it. South Africa has taken, I see, a quite advanced position on it, both on the Reserve Bank and the FSCA. I see it's a licensable investable asset class now that can be invested in, which is quite good news. But the whole regulations and legislation around crypto and blockchain technology is quite specific and sophisticated. It differs from country to country, and there aren't that many countries that actually has the necessary regulatory infrastructure to be able to cater or support clients, companies in this industry. So we've seen Switzerland and Gibraltar taking a very advanced approach with it. Some other countries similar. Some other countries have a bit of a lackluster approach to it, but I think going forward, it probably will be an increasingly important area of business for a lot of clients, or at least the blockchain technology being incorporated into their business offering to be able to successfully service clients. I'm now going to sort of go into the area, Neil, with regard to property structuring, which is quite popular as well for clients. You'll notice, ladies and gentlemen, there's a diagram to the right of the screen. That's not the go-to and be-all and end-all of property structuring structure. As Renee also mentioned, that it's very much a bespoke approach with any form of business or property that you wish to purchase. The structure does change quite a bit. There's various factors that play into that. The key question, I think, or the key questions one needs to look at to determine whether you should actually use a structure to purchase a property offshore or not is really, what is the purpose of the property? If it's going to be a family home or a holiday home, it might not need a structure. If you live in a country, for example, that doesn't have estate duty or inheritance tax or capital gains tax, a structure might not be needed in that specific instance, especially if there's no commercial activity relating to the property. If there is a commercial element to the property, for example, your focus is buy to let or invest in property as part of your wealth creation strategy, then a structure might be a good option for you. What that structure looks like will change, of course, depending on the jurisdiction you are going to purchase a property in, how many properties, what the value of the property is. That does play a very large part. So let's maybe look at some of the types of routes that clients can take. Property held in personal name. So as I mentioned, this is typically a scenario where you might live in a country or want to relocate to a country where there isn't estate duty, there isn't capital gains tax, there isn't inheritance tax. For example, Mauritius. A lot of South Africans, of course, moving to Mauritius for that purpose. The kids move along, the parents move along there. This is their main residence. They want to move to there. They don't want to rent it out. They want to live there. That's typically a good scenario where you don't really need a structure. It might be good to have a structure, but it's not necessary. Secondly, the trust, property held in a trust. Now, the example I mentioned earlier, you can also use a trust. It works quite nicely for that. We don't want to hold the trust, the property in your personal name for various reasons. The trust is basically a legacy and estate planning vehicle. It's not foreign to South Africans. A lot of South Africans have family trusts who actually hold property. So it's something very similar in operation from an offshore property purchase and holding the property in a trust perspective. A trust, like I said, is not a commercial entity. So if the intention of the property is or the purchase of property is to buy to let or to generate income, the trust might not be the best route. It's really a case of legacy planning, estate planning that goes with that option. Also, in the event of the main member of the family, for example, passing away, they don't want issues with who's going to inherit the property, who has rights to use the property. That a trust is an excellent vehicle for that, because you can regulate quite nicely the use and enjoyment of the property in the event of your passing as the main family member. Property held in a trust or company, or just a company or company trust model, as is in the example, that's typically where you actually have a commercial element to your to purchasing the property. Now, it differs, like I mentioned, quite a bit from region to region and country to country. So, for example, if you are looking at purchasing property in the UK market, it looks very different, and operations very different. For example, compared to Mauritius or compared to France, for example. UK property structuring, for example, also there's a lot of other key factors one takes into account. For example, if the person UK domiciled, the value of the property is in excess of £325,000 because that's the threshold for a UK inheritance tax. Mauritius, of course, a bit more simplified in that space because they don't have many of the taxes imposed, such as in the UK. France, of course, also we have clients who purchase property in France. France actually imposes a tax on non-residents, whether you hold in your personal name or through a structure. So a lot of planning goes into actually owning a property in a particular jurisdiction. What the value is, we ask quite a few questions for the client and really embark on this journey with the client and get to know them quite well and get to know their background quite well and what their strategy is with purchasing a property. Because if you are in the buy-to-let market, for example, the structure will definitely take on a different look and feel altogether. So the estate, legacy, and tax considerations are quite important. And we at Sovereign really like to take a holistic approach when we assist clients. We ask questions in terms of your retirement focus, your wealth creation focus, especially if you work with a client that is a bit of a swallow, so they might move from country to country. The structure that they have needs to be able to have some sort of flexibility built into it to cater for their change in tax residency, but also in terms of the change of their needs as a client and their family's needs going forward. All right. That concludes my slides, Neil.
Great stuff. Okay, if we can just close that, please, Ralph, and then we'll get to questions. You can just close the presentation back. Thank you very much, both Renee and Ralph. Please, I'll encourage every one of you to ask loads and loads of questions. I mean, there's lots of questions I would certainly have, and so please drop it into the box. I have a few which I've got directly from my side. So first, a couple of things, and I don't know who to ask, whether it's you, Rolf, or Renee, but both of you would probably have the answer. If we look in South Africa at the moment, I mean, there's been quite a mass exodus of people, looking at immigration and also, at residency in other countries and that kind of thing. Also, there is other people that have also just diversified their property assets into two different countries as well, really to hedge themselves against the rand, because the rand has really taken a beating, certainly over the last couple of years. And yes, we've got this big load shedding thing that hangs over our head, and a lot of people are saying, well, listen, I need to look at offshore. So the question is, what are the more popular jurisdictions that you are seeing on your side that people are consulting you with in particular? If we talk about immigration, residency, and then I think property investment would be probably slightly different. So Rolf, I don't know if you want to have a crack at that, or Renee,
Sure.
or both.
Sure, I'll go there, Renaud. For raising seed, really it differs in property purchase as well. You know, South Africans are quite diverse in terms of their needs. You know, if it's an individual versus a family, etc. So, you know, if it's an individual that isn't unmarried, you know, especially over the 2020-2021 period, you've noticed the nomad visas and permits were quite popular. Guys working remotely from their laptops. If it's a family scenario, you know, their considerations are quite different. They want a safe, secure region. They might have, you know, still a lot of interest in South Africa from a business perspective, from a family perspective, so they don't want to go too far. They've noted quite a lot of interest in Mauritius, for example, as well as retirees, because the requirements are fairly reasonable for them to enter. You don't have to have a massive amount of money to invest there. And like I said, it's close to South Africa. People like the warm weather. We've also noted, obviously, the European options quite a bit. Those are more for clients, you know, their children are maybe a bit older. Their children want to study after school. They want to purchase a property there. It's obviously Europe has there's a big attractive factor to stay in Europe. Portugal has been the firm favorite, but also other jurisdictions. There's been some changes now. So that really links up to also in terms of the properties, if they're going to buy a property or just rent it out. And a lot of the visa or the permit types actually require a level of investment, either in property or in company or something else. And so it really differs from client to client, Neil. And I mean, just from the past 6 months, I've noted in terms of inquiries we've received, it varies. It's Mauritius, it's Europe, it's the US, it's the UK. So it really varies quite a bit, and it depends on the nuclear family structure, but also an individual who wants to retire or an individual can work remotely.
Okay, perfect. I don't know if you want to add to that, Renee. Do you want to comment as well?
I would like to add to that. It's just from a structuring perspective, if you diversify your business, Mauritius is very popular for South African tax residents.
Yeah.
And the reason for that is due to the close proximity. It's a 4 or 5 hour flight for you to go there. Clients like to take their families there on a holiday as well. So I think not only that, but also if you do business in Africa, Mauritius has an extensive double taxation agreement network with countries into Africa, which is very popular. And that's why I think Mauritius, from where we are, is quite popular. But I think the moment you do business, for example, in Asia, our clients would look towards Hong Kong and Singapore to access that market. I think doing business in Singapore, for example, it's a fantastic jurisdiction, but there you need to keep in mind the time difference of 6 hours. So I always say to my client, you can set up a Singapore company, but before 12 o'clock every day, you need to conduct your business with them. Otherwise, you need to wait till the next day. So that sometimes also plays a role. But definitely Mauritius, in terms of setting up trusts, that doesn't really matter where you set it up. So that usually is Mauritius, Gibraltar, Guernsey, and the Isle of Man. UK is also very popular because it's easy to travel there, also have a good range of treaty networks that one can access to. But those are typically the names that pops up on our site most of the times.
Okay, excellent. There's a question here, and I know that both of you are not property experts, and so we talk about property structures, but the question is, and it's a good one because I think, you know, as I mentioned, there's different reasons, and you actually explained very nicely, Renee, you know, the different reasons why people diversify. But certainly from a property perspective, you know, you get your investor and then you get your residency buyer. The question is, for investment property in Mauritius, what are the likely yields? Now, I do have an answer for it. I could even answer it, but I'm going to give it over to you, Ralph, and also maybe the reasons behind that. Because if I was an investor and I wear my investor hat right now, if I'm looking for yield, I'm not sure whether Mauritius could be a good yield return. Am I right? Am I wrong?
Yeah, we actually have a roadshow last year, I think, in Mauritius as well, quite a popular jurisdiction. Like I said, is increasing quite a bit, just looking at the past 6 months. I think most notably, one must understand Mauritius is only so big, right? So there's only also specific schemes in which you can, as a non-Mauritian, purchase property. So we certainly aren't, I won't be able to say, listen, you're going to get 6%, return on your investment over such a period of time, etc. But just in terms of the practicalities of investing in Mauritius, one needs to be very cognizant of in terms of what your needs are and what the market obviously can offer. But I think I think if one just goes to the practical level, it's you as a foreigner can't buy just any place in Mauritius. There's specific schemes, they cater for specific needs, and they are limited, and they're going to be increasingly becoming more limited as more people obviously move there and purchase property there. South Africa obviously be one of the, I think the stats came out with the second largest purchaser or invest in property in Mauritius. First is France, obviously the language benefit there, a lot of Europeans as well, a lot of Americans. So I think just going on the practical basis there, that the amount of property available, land available, is limited. So that obviously has direct impact on the amount people charge for property and the availability of property, which increases prices. So from that perspective, probably a good option. What the markets obviously do, I'm not an expert in that, so that's but just going up from a logical point of view, there's only so much available. It's decreasing, values will increase, and obviously it will definitely be a seller's market going forward. But yeah, there's a lot of interest in Mauritius from South Africa. It's always been a popular jurisdiction for South Africans for family holiday investment business. It will probably still be going forward. We have this sort of saying it's the Monaco of Africa. So yes, a lot of clients, and a lot of South Africans especially, are interested in that market for investment purposes.
Okay. Neil, I would just like to add to that. Sorry.
Please do.
So, and I'm not a property expert, but what I can tell you is, in my view, I think it's going to be difficult to get the good returns we get in South Africa on property investments. Yeah. But I think a consideration comes back to why you're doing it. So the growth might be less, but remember, you're hedging against the rand. You're building that offshore estate. And I think that's also something that one needs to take into consideration to say, actually, is this really worth my while, yes or no?
Absolutely. No, sure. I think it depends very much on the motivation. But what I do understand, if we had to put a number to it, what are the likely yields? If we had to answer it would be below 10% if you had to rent out properties. As I understand, I don't think we're going to see very high yields. And I think, Mauritius is a typical capital gain type investment. And especially if you're looking at a residency type investment. Okay, there's another question with regards, it's a bit of a general one from the sovereign perspective. Do you have representation in the Oceania area, obviously New Zealand specifically? And I would assume, yes. Who wants to take that, Ralph, or you, Renee?
No. So we do not have an office in New Zealand, but typically what we do, if we get a request for jurisdiction we are not based in, we've got quite a big group, and we'll just reach out on our platform to ask who has a connection there, and usually through that we will potentially be able to help a client. So we're not there physically, but if a client has a need to speak to someone there, we can reach out to our network and see if we can help.
Okay, perfect. Great.
Just to add,
please.
Neil, just to add to that, a lot of clients, South African clients, especially like I mentioned, are swallows. So Australia, New Zealand being a very important jurisdiction or popular jurisdiction for people to immigrate to. So they might have a structure. And we see a lot of clients who have pension structures, etc., moving or immigrating to those jurisdictions. So as Renee mentioned, it's quite important that we actually link up with a tax expert in that country where this client will become tax resident going forward, and then to ensure that whatever structure they have in place is actually compliant with the local laws, or we understand what the tax treatment at least will be pertaining to the new country. So yes, it's sovereign. Obviously, we will link up with quite a lot of tax advisors and specialists in those fields to ensure that the clients do understand what the effects will be moving into that particular country.
Perfect. Great, because I think, as you mentioned, as you so nicely put, depends which country you're going to go in. There's different jurisdictions, different laws and regulations that you have to follow. So yeah, very different. Right. So you mentioned you had a team in the Isle of Man. Is that a physical office?
Yes, it is. Yes. We do have a physical office then. It's one of the strongest offices in the group. Yeah.
Okay, so I would assume when you say strongest, so there's interest in people in setting up structures in that particular environment.
Definitely, yeah. And also they are very clued up with the UK, and as we all know, so we all are a bit scared of SARS, but I think everybody's even more scared of HMRC. And the Isle of Man are quite clued up with the UK legislation as well, and the reporting obligations.
Absolutely. Okay, good. All right. So let's just elaborate a little bit on what you were telling us about structuring your business successfully, compliantly, and tax efficiently, etc. Renee, if you are a South African tax resident, and I mean, just to clarify the point, that if I'm a tax resident, am I allowed to be a director on the offshore company?
You are allowed to be the director, but the majority of our directors should not be tax resident in South Africa, because then your place of effective management will be in South Africa. So what we sometimes see is if clients are not comfortable with appointing someone like a sovereign as a corporate director on their company, there are cases where we can look at split boards to give them that sense of comfort. So yes, you can, but just be careful of the place of effective management and control.
Okay, so if I'm not a director, what guarantee do I have that sovereign will act in my best interest?
And that's a very good question, and a very popular question asked from clients, which I completely understand. I think when it comes to that, you need to do your homework on who you are dealing with. In Mauritius alone, for example, there's over 160 management companies, and that's only in Mauritius. So you can imagine worldwide how many companies are there that can set up trusts and companies. But I think it's important to do your homework and see how long have they been in the industry. What licenses do they have? Just look at their track record. Obviously, from a sovereign perspective, we've been doing this for 36 years. Setting up trusts and companies for clients, it's our bread and butter. So if we lose a license, we might as well just close our business. So, but I think do your homework when it comes to that. In addition to that, we also have professional indemnity cover in place. If something were to go wrong, that cover, and it's proper cover, will kick in. I think what also provides comfort to clients is we obviously give them viewing access to the bank account, and we can also give them the signing authority on the bank account. So we're not allowed to make any payment without the approval from the client. That being said, that's just from a sovereign perspective. We've got a bunch of controls in place, but also from a banking perspective, they also, before the bank releases a payment, they make sure that it complies, that it's the right person signing the instruction, etc., and things like that. What I can also add to that is on trust level, if you feel you're not comfortable with handing over control, you also have the option to appoint a protector on your trust. The protector is not allowed to benefit from the trust, but the protector has the right to hire and fire the trustees and to veto any decisions made by the trustee. And then also in the trust deed, we have a paragraph dealing with excluded persons. So you can specifically dictate there to say in the trust deed that no employee or relative of an employee of sovereign are allowed to benefit from the trust. So in a nutshell, there's a range of things we do to ensure that the client's assets are safe. And also, last comment on that is we don't manage money. We do the administration. And we need to comply with the laws in each and every jurisdiction to ensure we keep our licenses and we stay in good standing with them.
So no deposits in your bank account.
Unfortunately not.
Yeah, no, and it's amazing just to see, there's so many people when you see some of these systems and you hear about these stories and you read about these stories of scamming and all that kind of stuff, that it still actually happens. So compliance is so important.
It is, yeah.
Yeah. Okay, great. So I want to talk a little bit about the UK market, Rob, because from a property investment perspective, we find that that's almost like the number one market for people that are sort of looking to stay in South Africa, but rather to hedge against the South African rand. And we know how powerful the UK pound is. Do you set up those kind of structures as well? And what kind of structure would you recommend for somebody who would like to remain in South Africa, but who would like to invest in UK property offshore and build a portfolio?
Yes, yeah, definitely. So we do assist clients quite a bit with UK property structuring. It's quite popular with South Africans. I think there are a lot of service providers that actually market the options within the UK property market. I know specifically with the student accommodation being a popular investment type, is because of the yields and the growth in that market specifically. The factors we take into account in terms of, or to determine which structure would be suitable for the clients varies quite a bit. So if it's a for example, a UK national, UK domiciled person who might be living in South Africa and might be living here for a very long time. But the option might be, or the intention might be, to return to the UK in the future at some point in time, or they might not return. The structure looks quite a bit different to a purely South African person who's always been a South African citizen, tax resident here, and looking at investing into UK property. The structure does need to, there's various reasons for that, because of the requirements from the HMRC, as Renee mentioned. They're quite aggressive, they're quite specific in terms of property structuring and non-residents or non-resident entities owning UK property. In the past, it used to be a lot more simplified. I think because of the massive growth in non-UK residents owning UK property and all the structuring that went with that, it necessitated the MHRC, to really implement additional measures and points of that need to be complied with. So a second point, also quite importantly, is the value of the property. I mentioned earlier in my slides that a key consideration there is the £325,000 threshold, and that really comes from the estate duty, sort of the inheritance tax sort of threshold within the UK. That it looks different for different people, and once again, if you are resident in the UK or not, but also if you are going to be living in the property or not. So even a lot of people buy the property and they might rent it out for Airbnb, whatever, but they might actually be living in the property for certain amount of months per year. That also has an impact in terms of the tax treatment of that specific property within a structure. Or even if you are bequeathing it or saying, listen, your children can live in it and you have some sort of indirect right of enjoyment of the property, that also impacts the tax treatment of the structure and what the structure needs to look like. For guys looking at investing in UK property, maybe in multiple units or multiple properties, definitely a structure is a requirement there. We've noted that if it's maybe a few business partners and they are looking investing into a company, they typically look at the Isle of Man, for example, as an investment company, and then maybe into a UK company that actually holds the properties individually, where they can then sell off the company in the future. It's a lot easier in terms of transferring the property ownership to someone new. It's a model we also typically see in South Africa, but also right at the top, that the trust model doesn't always work well in all circumstances. They might need to link up some sort of pension vehicle, a QNAPs, for example, with that in more sort of structured, a more sort of a layer type of structure, and there's various reasons once again for that we discuss with the client in a consultation. So yeah, just in a nutshell, it's the reasons that we take into account to determine which structure is suitable for a client varies quite a bit, and it very much is dependent in terms of the use and enjoyment of that property, or the purpose is of that property purchase.
Excellent. I think you've articulated that very nicely. I've also seen there's been in the EB5 area in the United States of America. And I know the entry levels, if you're looking at complete immigration residency, have you, do you deal with that kind of thing as well?
Yeah, yes, I've seen one or two inquiries about it, and I think one is actually hasn't gone through on my side, but we have a department in Sovereign that actually focus on raising citizenship by investment programs. The EB5, and there's EB2, by the way, as well, that clients actually look at, and that's typically if you are looking at basing yourself within the US. The EB5 requirements are quite high, by the way. It's definitely not for everyone. It used to be 500. I think it's now more close to $800,000. Looks like investment that one needs to consider. EB2, a bit more simplified, and though the guys who can qualify for EB2 visas, it's a very short list of countries that actually qualify for that. So we've noticed a lot of company clients actually inquiring about citizenship by investment program opportunities where they acquire a citizenship in that country, most notably Grenada in the Caribbean. The process is fairly straightforward to obtain that passport. It's a donation or investment in that country. And Grenadian citizens actually are eligible for the EB2 visa, which gives you access for your family to live and work and study in the US. The entry requirements are a lot lower than the EB5, for example. EB5 investment requires you to, it's a massive investment to the country. People need to be employed. You really need to show that you are going to sort of invest into the US economy, which is obviously massive. And that amount that I mentioned earlier is a sort of indicative factor how ready you are for that. So it's a high amount, so it's not for everyone, but it's $900,000
US dollars, I think is the number. Is that right?
Yeah, 800, 900,000. It differs. Used to always be 500. Then, it's a very, they change the requirements quite a bit. It's sort of a slightly moving target sometimes. But it's quite a large amount, and that then paves the way for you to, for the green card, and then eventually US citizenship, if that is your intention.
Right. Yeah, excellent. Okay, can you believe it? I mean, the hour is almost up, and I see there is one or two questions there which we can deal with later. But Renee, what I'm going to ask you to do is give us like your 2-minute wrap. Leave the audience with something that they can take away, in particular with setting up your structures, etc. And so maybe give us your parting shots over there.
Yeah, sure. I think as a South African myself, I do not want to leave this country. I enjoy living here. I think the lifestyle we have here, we're not going to get overseas. But as a mother of 2 young children, I also have my concerns. So I think the first thing for me is do the homework, speak to people, know what the options are out there, whether it's setting up a retirement plan overseas, which is a very low cost vehicle. And there's a very nice way for you to take your foreign investment allowance out and contribute it to that vehicle, just to start building up something offshore. From a personal perspective, I almost think that's a must for everybody, and it's not an expensive exercise. From a business perspective, when you do approach people to discuss these type of structures, I'm going to bring it back to put the right team together. Everybody is an expert in their own field. And at the end of the day, there's a lot of moving parts. So make sure you put the right team together to manage it, get your tax advisor, get the right management company, on board a reputable bank. Because if you put the right team together and you understand your structure, it will be a success for you. Because I hate meeting with clients where they've got these complicated structures they don't understand, and it costs them an arm and a leg. So that's my 2 cents worth on what I would like you to take away today.
No, great. I think it's more than your 2 cents worth. And of course, with Sunday being Mother's Day, I hope your children spoil you rotten on Sunday, Renee. But thank you very much for sharing your insights. It was really great having you today. And Rolf, your parting shots rather to our audience.
Thank you, Anil. I can basically just repeat what Renee said. I think it's so important that you really sit down, maybe yourself, before you even sort of pull the trigger. Really sort of, where are you going with, what is the intention, what is your motive for expanding offshore or moving offshore, whatever the case may be. And then obviously surround yourself with the appropriate people, the knowledgeable people that can actually support you in that, advise on different components. A lot of clients, especially if they are more on the complex side of things, they need various specialists in various fields, and that's what we as Sovereign do as well. We ensure that all those people are on a table. We go into the nitty-gritty, really discuss everything in a lot of detail, get the necessary provisions in place, maybe tax opinion, for example, to ensure that everyone's on the same page in terms of how this will play out. South Africa is still a great jurisdiction. It's got a lot of advantages, so it's not all doom and gloom. We have a lot of challenges here, but I do think one needs to have a level of I think I think most South Africans are a bit tough in that space, but you need to be able to sort of phase out stuff, all the noise out there, and really zone in on the truth aspects of staying in South Africa. But also, I think it would be a wise choice to ensure that you do have your wealth, or a portion of your wealth, outside South Africa, just to hedge against the rand and all the other challenges that we face on a day-to-day basis as well. And that includes your company or actual wealth generating vehicle. But if there is an offshore element, if there is a component of your business that you do service a large portion of your clients outside South Africa, that typically is a good indication that you might be ripe for offshore structuring.
Rolf Wichmann, thank you very much. That was really great advice, great insights over there. Renee Silk, also of Sovereign, thank you very much. That brings us to the conclusion of our webinar today. And I also encourage you to reach out and engage with Renee and Rolf. And those who have requested a consultation, they will certainly make contact with you, or you can email a request on the info@REI. And to our audience, thank you for joining us today and for your participation. And we hope that you got value from today. And I hope everybody eyes open up to different opportunities. When you're moving offshore, is to work with the professionals, whether you're setting up business or property. As John Larson said, globalization is not a monolithic force, but an evolving set of consequences, some good, some bad, some unintended rather, but is the new reality. So our next webinar is next week. That's also at the same time, Thursday, the 18th of May. It's the same time from 12 o'clock to 1 o'clock. It's titled The Ultimate Guide to Property Investing. And that's maximizing your property returns with trust in South Africa. So obviously that's for the local investors. And to register, you just go to the REI website under upcoming events, and you just click on the registration over there. So once again, thank you to our guests, Ralph and Renee of Sovereign, and it was great having you. And I'm sure going forward, we will be looking at specific jurisdictions going forward. So to you, the audience, to you, our panelists, thank you very much. And stay safe and successful investing. And this is Neil Peterson, our real estate investor.